Hello traders, welcome to your daily market update for Wednesday the 13th of May 2015. And overnight we've seen a fair bit of price action as a result of some information coming through from the Euro. IMF has made their payments, and we also seen the yields on the bond market soar, which really helped the euro dollar. And we also had a little bit of weakness in the US dollar, which also helped things. We have the GDP figures that are coming up next, and as you can see here through Europe, those figures will be quite important, and the market will be looking at those. If they do not meet expectations, we could see the euro start to slide, and I'll get to that a little bit in the charts. The US dollar was very weak overnight, and that was initially started on the back of Fed Minister Dudley's comments, when he said that he had no idea when rates would actually raise, and the market interpreted that as he is a voting member, and that if he doesn't have a clue when, well, then perhaps they aren't quite ready. They took it as a clue that perhaps they won't raise rates in September, and the market sold off quite heavily. Later on in the night, however, we did have Fed Minister Williams, and he is also a voting member, and he came out and said that he would rather to raise rates sooner rather than later. Typically, both responses should cancel each other out, but it's not how the market worked. The damage was already done, and the US dollar was down on the back of Dudley's comments initially. We'll have to see how it plays out tonight. We do have retail sales, and if they do miss, I'm sure that the US dollar will be sold off heavily. However, if we do get a pretty strong print, we could see a bounce within the US dollar, but still remaining within the range-bound market, I'm sure. The New Zealand seen a little bit of action, but the Governor Wheeler come out this morning, and he said that he provided no signal or no indication at all as to any further rate cuts, and didn't really talk about policy, and he continued to deflect that comment and saying that you'll have to wait until later in the month when he addresses the next conference. So the minutes were predominantly around Auckland and the new measures that they are putting in place to curb investment lending in the Auckland area. And you need to have a minimum of 30%, and he's now setting out guidelines for owner-occupied, and these rules will come in effect in October. And the market interpreted all of this as these additional measures for the housing market will potentially hinder the RBNZ from providing any further rate cuts until these measures have been put into place. So initially the New Zealand dollar rallied on the back, but I think that any rally is going to be capped somewhat, as the market is really far stretched with their assumptions. I think that the meeting was just purely to address the housing issue, and later on in the month we will we'll see information about the economic policy situation, and I don't think that he is going to stray too far away from a dovish result. So I think that the rally will be somewhat curbed. So let's get in and have a look and see what we've got coming up. We do have a little bit of Chinese data, retail sales, industrial production. That will affect the New Zealand dollar as well as the Australian dollar. And if they come in weak, we could continue to see the falls resume. And likewise, as I've mentioned, we do have domestic product coming out of the Eurozone, and that will be heavily watched as well. We'll have a little bit of pound data, but later on in the session, the key minutes from Governor Carney will come out, and the Bank of England's quarterly inflation report. That's really the European session's key economic release, and it's going to be interesting to see how that rolls out. That'll be coming at half an hour after the gross domestic product for the Eurozone as a whole, and we'll wait and see if we do see an uptick there in GDP. Later on in the US session, we have retail sales, as I mentioned. That is the key release coming out for the US session, and that will look to manipulate the US dollar for the session, and I'm sure it will set the tone for the remainder. And then later on, we have some more New Zealand data coming out, retail sales and business PMI, and should those figures miss, I'm sure that New Zealand will continue its recent pressure and falling. So that's what we have coming up for today, and hopefully there's a fair bit of data there to monitor, and hopefully we'll see some price action worthy of trading. Now, if we go to the US dollar, you can see here that it did sell off on the back of Dudley's comments. We're still trading within the range, but If we do get a surprisingly really weak retail sales, we could break the support level. However, if it does come in line with expectations or slightly above, I'm sure that we'll remain to trade within this range here. Let's go and have a look at the charts, and we'll start off with the New Zealand dollar. And you can see here that we did get that bounce on the back of the initial statement and minutes from Governor Wheeler in the New Zealand, but since then we have faded away and started to resume lower. I expect this to be a short-term bounce, and potentially we'll see this continue lower. We'll be subject to the US dollar tonight and also tomorrow morning's New Zealand data. But nonetheless, definitely the bears are in control here as soon as we've had the breakout of the rising wedge. And I do expect at some point the price to continue lower based on the economic front. The Australian dollar had its numerous touch once again of the 80 cent range and just can't manage to break above it. It is a very strong resistance level. If it does break above it at some point, that is a clear sign that it does want to go higher. I think that will only happen on the back of some really weak US data, and should the US dollar really get momentum to the downside, then we would push above the 80 cents. But for now, that seems to be capped. And in fact, if you look at some shorter time frames, you can see here we've somewhat got a triple top that has been formed, and it'll be interesting to see if it holds. And we have formed a triangle, you could say, and we will be waiting to see a breakout of that before we get too excited. And the 80 cent level, as I've said, was a false breakout a few times now, so I really need it to break out and hold above it before I'm convinced the breakout is the actual long-term direction. The Great British Pound continued its strong charge, and with that, I don't think that there's any reason or any purpose for it to pull up. And tonight's inflation report could actually be positive enough to push it to test $1.58, which is the next major resistance level if you have a look here on the chart. So the momentum, since we've had the completion of the cup and handle pattern, the bounce off the 100-day moving average has continued to follow through with great strength. And we will wait and see exactly how it continues to perform moving forward. The euro, if we have a look at the euro, it is still somewhat range bound. We have had an engulfing bull candle formation here on the daily chart. We are trading still above the 100-day moving average, and you can see that we potentially have a head and shoulders pattern. It's clearer on the 4-hourly chart where we have the shoulder, the head, and then another shoulder forming. If we do get a break below $1.12, the shoulder would be complete, and I would be looking for moves lower. But for now, it does seem that we do have a bit of support off $1.12, and we'll wait and see how tonight's GDP numbers roll out. Resistance is $1.13, support to $1.12. The US versus the Canadian dollar, we did see oil bounce quite significantly overnight, and that did weigh down on the pair, as well as the weak US dollar. So we have seen a bit of a pullback, and we have found support for the temporary measure here at $1.20, as you can see. A break below $1.19 would definitely open it up to the downside, but should we see a solid retail sales figure, we could see a bounce back in this pair here. The US dollar versus the Japanese yen is still range bound, nothing to get excited about, and I don't see anything this week pushing it outside that range. So if you are a range bound scalp trader, you'd be having a field day with this pair the last few months. Well, that's it from me today. There's a fair bit of data to keep your eye out for. There is a few trading opportunities there. So until tomorrow, where I will be back providing you another video, trade well.